Hello and welcome to News Centre. I'm Parikshit Luthra. The Reserve Bank has slashed its benchmark lending rate by 25 basis points. This is its first such move in 5 years and paves the way for banks to curb loan rates. This comes days after Finance Minister, during a budget speech, announced that income up to 12 lakh rupees would be tax-free under the new regime. India Inc. has lauded the rate cut, saying that it will complement the budget decisions announced by the government to boost consumption. It was a unanimous call to cut the repo rate by the Monetary Policy Committee, the RBI's rate-setting panel. The big question, will India now be encouraged to buy more vehicles and purchase a new home very soon as well? Joining us now to take this forward, we're joined by Sai Giridhar, Vice President, Federation of Automobile Dealers Association, Gummi Reddy, Secretary at CREDAI National. He's also the Chairman and MD at the ARC Group. Also on the program with us is Devendra Kumar Pant, Chief Economist at India Ratings and Research. Gentlemen, thank you very much for joining us. Devendra Pant, if I can begin by asking you, overall, how do you feel this will help in boosting the consumption in the economy, which had been a big worry all of last year?
Well, Parikshit, unlikely that it will give a big boost to the consumption, both the budget as well as this. So if we're talking about the budget, we are talking about the people, those who have got the benefit are top 3% or 5% of the population. And the consumption demand slowdown mainly originated from the people at the lower rung. Having said that, there will be some impact. But if you look at what is going to happen by this move, RBI's move, again, consumption response to, if you look at the theoretical form or the empirical evidence, consumption response is more to how the stability of wages, because that is more is the bigger concern. Yes, the way if the inflation trends down the way RBI has projected, certainly that lower inflation will increase the real wage growth. But the worrying point in today's numbers is what many of us may have not looked at it. The first quarter of next fiscal year, that is April-June 2025, RBI's expectation is a higher inflation than the December policy and lower growth compared to the December policy. And that is what is going to have some impact. No doubt, in totality, yeah, if they continue to maintain the liquidity in the right form, like whatever is required, not going to the loose or the very ample liquidity in the system, then the transmission which happens to the interest rate, the benchmark interest rate and other interest rate, your easy liquidity will have a bigger impact. But if the rate cut, if the liquidity doesn't ease, it remains in the deficit mode, then unfortunately one may say that this 25 bips repo rate cut will not yield result.
All right. So you're saying that the impact and the result of this rate cut is debatable and will have to be watched over the next few months. Let me also go across to Gummi Reddy of CREDAI. Mr. Reddy, how do you see this helping home buyers? What would be your outlook now?
Yeah, definitely it's going to help. I mean, we were expecting more actually, 50 BPS, but definitely it's a positive move. So it's we have been waiting for almost 5 years. You know how after the COVID, how the things have gone up. Before COVID, what was the rate of interest? Home buyers especially, even project funding also. Now everything is gone up. So now this definitely it's going to give a positive note. And we are expecting even next quarter also, we are going to, we are expecting at least under 25 BPS will be reduced. So this is a positive note. In a real estate home buyer, their EMI will go down. So definitely we are, very, very positive. But even during budget also, whatever the decisions have been taken by the finance minister in this thing, definitely they are going to help the home buyers. They are up to 12 lakhs, there is no tax. And even second home also, earlier only one home they were considering, now second home also people can buy. So where some tax cuts are there. So definitely it is a welcome move. We are really thanking the RBI to take this decision.
Okay, let me go across to Sai Giridhar of FADA. Sai Giridhar, over the last few years, entry-level car sales and also entry-level commuter bike sales have been under strain. Do you see some improvement on the horizon after the tax sweeteners in the budget and the rate cut?
So, Parikshit, see this in totality. If you talk about the budget and the rate cut by the RBI today, it signals a constructive policy shift that prioritizes the economic growth. It's in the right direction, I should say. And you're absolutely right. With auto loans set to become more affordable, we expect a stronger demand, especially in the price-sensitive two-wheeler segment and in the entry-level car segments. So these two segments, which were actually lagging behind, I think they will get some boost from both these steps in totality. Though the only worrying point is that it should not be neutralized by the price increase by the industry. So, and the price increase happens on the attribute of the higher input cost and also the depreciating INR. So that's the only worrying point. But I think it's the right in the it's the move in the right step. And though it will take some time for these rate of interest to step in, because technically. This helps in making the interest rates reduction. However, it takes some time as the immediate impact on the cost of deposit does not happen. But right in the step in the right direction, and it's going to help the industry overall.
All right, let me go back to Mr. Devendra Pant. Mr. Pant, on the whole, what is the big message that you pick up from the RBI governor's speech? Now, this rate cut had been called for by people in the government, by top ministers and the industry as well. Everyone had been requesting and hoping that a rate cut will happen. What does this show in terms of the RBI stand right now and the big challenges that you're looking out for? Inflation is one of them, as you pointed out.
Yeah, another big challenge is which Mr. Giridhar has also pointed out, like the input cost. So how we being a net commodity importer economy and the way the currency is behaving. Like some of it, the recent depreciation was the pent up of the past last year or this fiscal year, where the rupee was fairly stable. See, the biggest unknown in this entire scheme of things is whether there will be any tariff imposition by US on India. As of now, they have US imposed tariff on Canada, Mexico, and China. Now, if it is imposed on India also, now it could be a double whammy. There's the tariff, and on top of that, the currency weakening. Yes, no doubt, some of it we may be able to recover in the form of services export, because there we are the leader, and we have surplus on the services export. Now, one thing, although the inflation and the growth forecast is on the assumption of a stable or good Rabi harvest. Now, if all of us know the temperature situation in the month of January, though he talked about the climate and other things, so climate change impact is taking place on the economy. Agriculture is very vulnerable to that. And if the Rabi output, because of excessive heat or higher temperature, is not in line with the expectation, then we may see a situation where the food inflation doesn't come down to the expected level, or the way it is thought of, that it will lead to 4.2% inflation in the fiscal year FY26. Now, if that happens, and we don't see the commensurate increase in the nominal wages, because if you look, nominal wages are barely growing at a rate higher than the overall inflation, and that real wages, that's a major challenge for the economy and so forth. So as far as consumption is concerned, because 1 percentage point or 100 bips increase in real wages translates into 110 basis point increase in consumption growth. So if the inflation doesn't come down or doesn't behave the way it is expected to behave, then that will be a challenge for the monetary authority. And it will look very odd that they will go back and take some step which is contrary to what they had done today. Only hope is Gardner, though he hasn't put in any number, but he has mentioned in his briefing that they will provide sufficient liquidity in the system. If the sufficient liquidity is provided, then the adverse impact, then the rates may come down, right? The external benchmark rates, all those with repo, T-bill, and all those, they will see coming down first compared to the other rates.
All right. Let me go get in Sai Giridhar once again. Sai Giridhar, by when do you expect to see some changes on the ground? Still too early. The rate cut has just taken place. Yes, the budget had announced sweeteners, tax relief for the Aam Aadmi. By when do you expect to see some changes in sentiment?
See, as I said earlier also, see, it takes some time for the impact to be seen, at least on the bank side. And only when the impact, say, on the deposit cost for the banks, only then we see the banks actually translating this benefit to the consumers. But we are expecting it to probably happen by somewhere around April. So we expect that from April onwards, the rates should soften, and the kind of money which the consumers will be having, the disposable income which they'll be having in their hands, and it should probably be reflecting into more sales, at least in the entry level vehicles and two-wheelers segment for us.
Sai Giridhar, when we speak about lower rate for loans, give us a sense of which is the salary bracket or the customer salary bracket which has been avoiding or postponing their decision to buy cars because of high cost of living, inflation, stagnant wages, and which is that segment where you hope there will be some revival in sentiment?
See, though we probably expect the major impact would be in the lower end segment, in the people who are wanting to buy a two-wheeler, taking a loan of approximately 50,000-60,000 rupees, or even a lakh of rupees, or probably even an entry segment car wherein the loan would be less than 5 lakh rupees. But on a broader line, if you see, the impact would be across board, because the rate cut would not be limited only to the auto loan. So the rate cut would be even in the home loan, in the business loan, in the personal loans. So even if a salary class or a business class will have more disposable income, he'll probably be he can afford more EMI, you should say, from April onwards. So that would be in a nutshell. So that's what I'm saying, that it's a step in the positive direction. And yes, probably even we were looking at a much bigger rate cut than 25 basis point, but I think it's the first step taken. In coming few months, or probably by next financial year, we should be expecting more rate cuts, because if you compare the rates today with the pre-COVID era, there is a jump of approximately 1.5 or even up to 1.75% in real terms, which translates into a big jump as far as monthly EMI is concerned. So what we are talking here is approximately on a per lakh basis. On a home loan, it should be 1,000 rupees, 2,000 rupees. So it makes a major impact for consumers overall.
All right. Thank you very much for joining us, Sai Giridhar, Mr. Reddy, and also Mr. Pant. Let's see what happens as far as the state of the economy goes, and the consumption boost and the sentiment revival on the ground goes as well. On that note, we're taking a short break, but coming up on the other side, the United States has blacklisted an Indian company named Marshall Ship Management for facilitating the shipment of Iranian oil to China. Details when we return.